If you're about to start an LLC, watch this first. It could save you from a mistake that quietly costs people real money. See, every year, millions of people form an LLC believing it will lower their taxes and protect everything they own. By itself, an LLC does neither. And nobody selling you one wants to say that out loud. I'm a certified public accountant and I set these up for business owners the right way almost every other week. So whether you're about to form one or you already have an LLC just sitting there, this is for you. Here's what I'm going to show you. What an LLC actually does, what it does not, and where people quietly lose money. Then I'll show you the one move that turns an LLC into a real tax tool. Stick around to the end for that part because that's where the actual savings live. Let's start with the biggest myth of all. Here's the belief almost everyone has. If I form an LLC, I'll pay less tax. It is wrong, flat out wrong. When you form a single owner LLC, the IRS does something most people never hear about. It ignores the LLC completely for taxes. The technical name is disregarded entity, and it means exactly what it sounds like. See, for tax purposes, you are taxed the exact same way you were as a plain sole proprietor. Same forms, same self-employment tax, same bill. The LLC does not file itself its own return. Your business income just flows onto your personal return like it always did. So picture two people running the same business, each making about $120,000 in profit. One stays a plain sole proprietor, the other forms an LLC and changes nothing else. When tax season comes, their bills are identical to the dollar because nothing about how the money gets taxed actually changed. So if someone told you that forming an LLC would cut your taxes, they either did not understand it or they were selling you the formation. An LLC is a legal container. It is not a tax strategy. Now, that does not mean the LLC is useless. That's far from it. But if you formed one expecting a smaller tax bill and nothing else changed, you got sold a myth. Here's the second thing people believe. My LLC protects everything I own. This one is half true, and the half that nobody explains is the half that actually matters. Yes, an LLC can put a wall between your business and your personal stuff, like your house, your car, and your savings account. But the wall only stands if you treat the LLC like a real separate company. If you do not, a court can knock the wall down. Lawyers call it piercing the veil. Here's how people accidentally destroy their own protection. They run personal expenses through the business account and business expenses through their personal one. The line disappears. They never sign an operating agreement, so on paper, there's barely a company there. They personally guarantee a loan, which hands the wall right back. Do those things, and you have the paperwork of protection with none of the actual protection. So the LLC does not protect you. Treating the LLC like a real business protects you. Big difference. Alright, so at this point, you might be thinking I'm anti-LLC. I'm not. I just want you to buy it for the right reasons. So here's what an LLC genuinely does for you. 1, real liability protection when you run it correctly. That alone is worth it for most serious business owners. 2, flexibility. An LLC is like a blank slate the IRS lets you choose on how to get taxed. That option is super powerful, and I'll get to that in a second. 3, credibility and clean banking. A real business account, contracts in the business name, and a separation between you and the company. That's the honest scoreboard. An LLC is a strong foundation, but a foundation alone is not a house. See, the LLC is the container. What you put inside is where the money is made or lost, which brings us to the move that changes everything. Remember I said an LLC lets you choose how you're taxed. Here's the choice that matters once you're making real profit. You can tell the IRS to treat your LLC as an S corp. Same LLC, same business. You just flip a tax switch. And that switch is where the savings finally show up. As a plain LLC, every dollar of profit gets hit with self-employment tax, 15.3%, on top of your income. Once you elect S Corp treatment, you split your money into a reasonable salary and a distribution. And that distribution skips the 15.3%. For an owner with a real profit, that's often thousands of dollars a year that used to walk out of the door. To put a real number on it, an owner netting $150,000 a year can commonly keep somewhere near $7,000 to $8,000 a year with this election, even after paying to run payroll. Same business, same income, one tax switch flipped. You also open the door to a deduction called QBI, worth up to 20% of your business income if you qualify. None of that comes from the LLC by itself. It comes from what you elect to do with it. That's the whole point. The LLC is step one. The election is where the strategy begins. Let me save you from the 4 mistakes I see most. 1, forming an LLC before you have any income. If you're not making any money, you're paying state fees and filing headaches for protection you barely need. Sometimes the right first move is no LLC at all. 2, chasing the Wyoming or Delaware myth. People form an LLC in another state to save on taxes. But if you live and work somewhere else, you usually have to register it in your home state too. And you have to pay both. You do not escape your home state taxes by forming a company somewhere else that's cheaper. 3, stuffing everything into one LLC. See, if you own rental properties and run a business, piling both into a single LLC means one lawsuit can reach both. Different risks usually belong in different containers. 4, forming it and forgetting it. No operating agreement, no separate bank account, no upkeep. That's the exact behavior that collapses your protection when you need it most. And here's a bonus one, number 5. And this is the most expensive one. Staying a plain LLC long after your profit outgrew it. Once you're making real money and you never make the election we just talked about, you are volunteering to overpay the IRS every single year. It's the quietest mistake on this list, and it's the one that costs the most. Here's the quick checklist we run clients through so the LLC actually does its job. Sign an operating agreement, even if you're the only owner. Open a separate business bank account and never mix funds. Put a little starting money into the business so it's real, not an empty shell. And keep clean books from day one. 4 steps, that's the difference between real protection and a false sense of it. So here's the honest bottom line. An LLC is a good first step. It is not the thing that saves you money though. By itself, it does not lower your taxes, and it only protects you if you run it like a real business. The savings come from what you do next. The right election, a defensible salary, the deductions you actually qualify for. If you've already formed an LLC and you have no idea whether it's doing anything for you, that's exactly what we fix at HK Financial Advisory. We'll look at your setup and build the plan that turns that container into real savings, legally. Book a strategy session with my team. The link is right below. And if you're already wondering what that next step looks like, the exact salary you should be paying yourself once you make that election, I broke that whole thing down in another video. I'll put it here on the screen for you right now. Go watch that next, and I'll see you on that next video.